Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, the last half an hour of trade on the D Street. Well, the markets have inched higher on this weekly options expiry. You have seen 25,100 also on the intraday level. We're still holding up above 37 odd points at 25,087 odd levels. Pharma, financial services, oil and gas, real estate, banks, and even some gains on IT are driving the show right now at this point in time. On the Nifty, you have Cipla, Dr. Reddy's that have moved up in trade today. ICICI Bank, Bajaj Finserv are the other stocks that are hovering higher. From the F&O space, you have Mankind Pharma that's sticking higher. Titagar Rail, PG Electroplast are some of the other stocks that are also hovering higher in trade. But we're going to be starting off by understanding what's really happened as far as the markets are concerned, the derivative market is concerned, especially because SEBI chief, Mr. Tuhin Kanta Pandey, has spoken at the sidelines of an event today to the reporters, saying that there is a consultation paper that is underway to discuss about and to decode as to what should be the duration or the tenure of the derivatives as well, as far as the expiry is concerned. The kind of preference that Mr. Tuhin Kanta Pandey as a SEBI chief has said is that he would prefer there is a longer tenure of the derivatives market, but of course everything has to be gone in through the consultation of various stakeholders. Let's first listen into what SEBI chief has really said on that front.
Means that we can have longer term, more longer term derivatives. But all this is to be done in consultation. As I said, that in what form, how, we'll have the consultations.
So we will have a consultation paper coming?
Yes. Nothing will be on,
By when
this
will
part
the
of the.
consultation paper?
No, I mean, I can't
Is
give
it
you
like
the.
in a month,
No,
in a week?
no, I can't tell you that, but that's the thinking process we have.
But your preference is for a longer.
Yes, I mean that is qualitatively we have to see, but we have to calibrate it. So if you really look at my statement, where I said in a calibrated manner.
So weekly की जगह आप 15 days monthly
I
no,
said,
like what is
I am not
on
taking the thing
Pre-IPO
because no, because these are not something which are they. This is only in principle with what I'm stating we should be doing. But
have you discussed with depositories, because the last time it was mentioned on the grey market, curbing the grey market thing in January around so has the discussion now proceeded with depositories on this pilot project for pre-IPO trading?
no, this is just an idea I'm just throwing now, as a question mark.
So is it just an information-based platform or it will be
I'm giving a lot of questions. Today the conference is all about deliberation, so I'm saying that क्या करना चाहिए हमें तो उस आप if you just go through my speech, we'll get it uploaded into website.
No, I heard it. So any work has started on increasing the tenure of contracts, or sir, it is just right now a thought process within SEBI?
Yeah, this is the thought process.
All right, so there you heard it, Indian Markets Regulator Chief Mr. Tuhin Kanta Pandey clearly talking about how there is a plan that is contemplating to, somehow increase the tenure and the maturity of the equity derivatives contract as they continue to look to curb trading in this segment where more than 90% of the traders have been suffering losses. Remember, SEBI has consistently come out with that kind of a report even earlier. Now, SEBI Chief has said that equity market volumes have actually doubled in the last 3 years, and therefore they are actually thinking of that there could be a proposal to think of longer tenures for derivatives to check this volatility. Now, whether this will be, there is no clarity yet whether the tenure will be longer than 1 week, how long will it be, fortnightly or will it be monthly. That Mr. Tuhin Kanta Pandey has clearly said that he will not be able to suggest anything at this point in time. There will be a consultation paper in the offing. Let's actually welcome our guests on board. We have Dr. Venkatachalam Shunmugam, who's the partner of MCQube, who's joining in on this platform with us. Dr. Venkatachalam, thank you so much for taking the time out. It's been a very important day of discussion, and to have you with all the wealth of experience that you have had in policy making and how you've seen the markets from all corners, from commodities, capital markets, it will be the best to understand from you, how do you really see the current situation and what could be in the offing. Now, we have been seeing consistent efforts from SEBI to somehow protect the retail investor at large. 90% of the F&O traders are known to have lost money in their trading. How do you see today's statements coming in from the SEBI chief, and what do you think could be on top agenda that SEBI may have?
I think, I mean, as the chairman has rightly said, that it is a logical movement that the regulator is taking in terms of those two reports which have been consequently done, and has been indicating that more than 90% of the retail participants has been losing, as against the latest case that has happened. Where the Jane Street was found to be manipulating the markets and things like that, actually. So, I mean, it's if you cut back and look at like what actually was happening, is that the expiry day volatility in the markets, actually, and that expiry day volatility was found out to be the major reason for the retail losses that have been happening in the markets, actually. And I mean, in my opinion, I think SEBI moved on from monthly to weeklies, actually. What could be so weeklies is the lowest the tenure of the contract which are currently available in the market. And given what SEBI chairman had said, I think it could be monthly, which the SEBI may think about permitting only monthlies to be permitted, or somewhere between weekly or monthly to be permitted, actually. But if I look back and see, I mean, internationally, are there any contracts where there is there is a fortnightly contract or something? I mean, I'm not particularly aware of any of the, equity derivative contracts which are like fortnightly or something. So my guess is
Okay.
strongly that SEBI may permit the monthly contracts rather than the, weekly contracts.
Dr. Venkatachalam, just help us understand, we have seen in the recent past the Jane Street episode that occurred, which brought to light that a lot of manipulation is underway with such large hedge players also operating and taking the benefit of the large volumes on such expiry days, therefore somehow causing a hurt to the less informed, less experienced retail investors at large. Now, of course, SEBI has consistently been putting its own mechanisms into place to check any kind of a manipulation. That's one. But do you think increasing the tenure of such derivatives contracts can also help cut any kind of manipulations that occur?
See, manipulations can occur one during the expiry days, which is what was clearly coming out from the investigation which SEBI had put forward, actually. So and in a weekly, then you have 4 or 5 weeklies in a month, actually. So that literally becomes a kind of a play for the retail investors, being lured into to get into the market to play around and lose their money, actually. So if we cut away from weekly to monthly, then probably you have only one expiry to play around with, actually. And that too, my suggestion maybe is to say that there should be only one monthly expiry, because if we have two of the exchanges which are having the monthly contracts,
Yeah.
actually, that leads to SEBI giving two different expiry days to two exchanges, actually. So that again becomes an expiry play for the participants, actually. So yes, you're right. I mean, cutting away from weekly to monthly will actually reduce the volatility, and also reduce the attempts to manipulate the markets and make the retail lose the money.
Absolutely. You made a very important point, sir, where you did mark out that there are two primary exchanges that we function with right now, which have been both assigned to different days in a week for now, at least. This was a change that was brought in just about, weeks from now or months from now, and it will come into effect only from 1st of September. So it's still to implement, and now there is a rethink on how things should actually pan out. There will be more exchanges going forward, is what we are given to understand as well. So, could you elaborate on the kind of risk that will have, and, what kind of mechanism should SEBI be, looking at to ensure that number of exchanges that keep increasing do not ultimately lead to, again, contradicting their own efforts right now?
You're very right, actually. So that is also another concern on the back of which I spoke about having only one expiry day, even if the SEBI has to permit the
Yeah.
monthly contract, actually, because four, exchanges coming in and they bargain a point in terms of us having different expiry dates, actually, and that becomes essentially again four, monthly expiry plays for the market participants, actually. So essentially, I think SEBI should look at concentrating the. There have been reports which have been coming around about the concerns that the regulators have put about the expiry day play. So, given that, I believe that I think on that, SEBI should be strict about having only one expiry day rather than allowing each exchanges to have a different expiry day in a month, actually. So that becomes a four expiry days. Typically, we are going back to the weekly expiries, right? So
Yeah.
it should not be permitted.
Absolutely. Today's reaction speaks for itself. BSE stock has fallen by about 7%. We have Angel One that's also seen a drop about 6-7%. So again, these statements are causing some hurt on these exchange-related, brokerage-related stocks, which are again fearing the loss of volume, at least at this point in time. I want to understand from you, from a broader perspective, do you think all these disruptions are somehow priced in, or much more can actually happen on the course to follow going forward from here? What would your thought process be for all those investors who've been very big on capital markets related stocks over the last 1 year? How should they be viewing such developments, sir?
Yeah, so you're right, actually. So, I mean, if you look at the derivative markets growth, actually, it's an explosive growth. That's how I would, tend to explain that. Actually, that's an explosive growth. We need to slow down and look back what we need to do. And what we need to do is to strengthen our cash markets and strengthen the IPO sector,
Yes.
actually, so that so look at, like, so in terms of India as an economy, we are the fourth largest economy. But if you look at the market capitalization, we are the fifth largest market in terms of market capitalization. So that
Yes.
has to keep pace with the growth in the economy, and so that, like, the economic growth can further be sustained and supported by the market, actually. So we need cash markets, we need liquid cash markets, we need more play in the cash markets rather than the derivative play, which is again. So I mean, as a theoretical person, I always wondered, like, what do the derivative contract try to, discover in the equity market compared with the cash market? Because you anyway are playing the price to earnings ratio, actually, whether you do it for today, whether you do it for 1 month ahead, it's one and the same, right? So I think, I mean, it's occurring at the right time. The nation is going ahead with the online gaming ban, and
Yes.
that is, if that follows up with this reduction in derivative trading, it will definitely contribute to further strengthening of the cash markets, which is much more needed.
Absolutely. Well, Dr. Venkatachalam, thank you so much for all these wonderful insights that you've shared with us. This is a topic that begs much longer discussion, and we will continue to do that with you over the course of many few days to come as well, and as and when we see some more developments taking place. Thank you so much for being with
Thank
us on
you.
the
Thank
program
you,
today,
Sakshi.
sir.
Thank you.
Thank you. All right, viewers, what we'll do is we'll quickly welcome, our market expert, Swati Hotkar, who's joining in, who's been standing by. Swati, thank you so much for your patience for holding by. But this was extremely important to really get an understanding, and I wanted to also take your view on the same as well. This has been a talking point for the last 2 to 3 months odd. We have been seeing how market regulator is on the toes to find out any means and ways in which the end retail, investor could be protected, especially when we have seen the amount of losses that retail investors have been occurring. There have been so many factual data points that SEBI themselves have pointed out. 93% of investors losing money per investor. There's been lakhs of money lost as well. Cumulatively, there have been crores of money that has been lost in trade as well. And this kind of steps that the SEBI is looking to take, whereas they have to look at the exchanges part and what they lose out, but at the same time, this government and the market regulator is consistently talking about protecting the retail investor. Let me take your view on the capital markets related stocks which are bleeding today as a reaction. How would you look at that?
Actually, the SEBI is really doing a very well thing, and they're trying to protect the investors' interest itself. Now,
Yes.
if you talk about the stock specific as such, today we have seen a sharp sell off into the BSE, CDSL, and STL. All the stocks are really falling down. Now, on the technical front, I believe this will be a short lived kind of a sell off rally because the overall technical setup is definitely a positive. Since the SEBI just as of now is representing the papers and it's not coming, final outcome has yet to come into the markets. But looking towards the setups on the technical fronts on those counters, the short term view is little bit cautious. If you look towards the BSC chart as well, Sakshi, I believe that those who are having a long positions try to book it the profits. Freshers not recommended at the current market price. If you're getting any dips towards to 2200, that can be active. That will be a good support for this particular counter and can be act as a fresh buying positions between the 2200 zone levels. So view is little bit cautious on those kind of counters, BSC, NSCL, CDSL. Those are the view little bit. But for longer term horizon, definitely one can go for a long positions on any dips towards to their support zone. So the my view is for the short term period is being cautious.
Okay, fair point. Let me also just highlight for all our viewers what's really happening in trade right now. It's the pharma stocks that have pulled up in trade. So let's try and understand that one, Swati. How are you looking at this pharma move that's come about? Do you think this will carry on in trade? Should one focus on them?
Yes, definitely. On the farm also, I'm really very stock specific. If we look towards on the Dr. Reddy chart, the setup is really positive. It is under formations of the cup and handle formation. Now the stock is under the formations of forming the handle of the cup and handle formations. I believe that the stock has very formed a very good supports nearby the 1200 levels, and for the longer term horizon, definitely this counter is likely to give a very strong performance in the near term futures. So at the current market price, also one can go for a long position because the counter has given the downward sloping trend line breakouts. Today we have seen a very strong price momentums along with the volume. So whenever such kind of a price momentum happens with the volumes and both goes in hand, which gives the strong indications of the breakouts and the change of the trend for the short term period of time. I'm looking for a target of 1350 to 1370 levels in the Dr. Reddy. So definitely one can go for a long positions at the current market price.
Okay, got that. Let me also just pull up a few more stocks that are buzzing in trade. From the F&O space, it's PG Electroplast. After a massive downside moves last few weeks, the stock has been inching up gradually and now finding its pace again. So you can see a 4.5% move on PG Electroplast. Even the volumes are pretty much higher. How would you look at this one? Once again, is it giving an opportunity to take a fresh entry at all?
Yes, definitely, because whatever the rally we have seen in the year of
Yeah.
2020 from almost 200 to 1000 levels, and the stock has almost retraced 61.8%, which is the golden ratio of that particular rally. The stock managed to find out a very strong support of a for 485 levels, and from there onwards, we have seen a very swift bounce back rally. The counter is trading nearby the oversold zone, so the depth is very limited. Counter is already trading in the support area. Definitely one can go for a long positions at the current market price as well. The short term targets will be a 660 to 700 levels, and if it's manages to give the breakout of 700 levels, then the door gets open for the 4 digit as well. 1000 levels, definitely it will achieve in the near term futures. So those who are looking for longer term duration for at least 1 year and so, they can definitely bet on this stock.
Okay, fair point. Let me also bring up a few more other stocks in focus right now. Real estate, let's talk about that. Is real estate coming on top of your radar as well, Swati?
See, real estate's really doing very well from the last few months or say the week. Among those particular stocks, Prestige really looks very good at the current market price on the daily charts as such. There is another counter, Lodha. Lodha is the one stock which we have seen a very good momentum rally after the such kind of a sell-off. Now the counter is well placed above the 200-day moving average. No wonder today it is down by almost 0.3 or 4%, but I believe that the formations has been very good on the technical front on the larger degree. So one can keep eye on the Lodha. I'm looking for a target of 1400 levels. So this is the upside rally I'm expecting in the near term future. So the Lodha will be the very good stock to take into the long positions into their portfolio.
Okay, fair point. Let me also just highlight a few stocks that are buzzing in the Nifty 500 basket. The Just Networks is higher by about 6.5% in trade today. You see Surya Roshni, that's up 6.5% higher. Lemon Tree Hotels is higher in trade. IDBI Bank is moving up. You also see names like Tirupati Forge, that's higher. Coffee Day Enterprises is also buzzing in trade. Many of such names are actually tracking higher in trade. Let me also just pull up broader markets. Even though both small caps and mid caps have now slipped into the red, are there any stocks that are worth mentioning on the higher zone? So Reliance Power is another 5% higher in trade. We've been looking at this space for all our viewers too. Jupiter Wagons is higher. Titagarh Rail, I think it's the railway related pack that's also coming back into focus, Swati. But is it just going to be momentary, or will there be a continuation? We have not seen railways really participate as much in this year so far. So what's the sense here?
Okay, definitely, those are stocks are. This is the sector which is a very seasonal sector. Before the budget, during the budget period of time, only those kind of a stock shows their performance. I believe that the longer term degree, I'm not seeing any kind of a trend change in this particular. Yes, but some such kind of a pullbacks rally can be seen for a short period of time. I will not recommend to take a long positions. If those who want to interested into the longer term horizon, Cipla, Kamath hotels industries are really doing very well from the last few trading session. Kamath Hotel is the one counter which looks very positive because the weekly chart shows that the stock has given the rounding bottom formations very slowly and steadily. It's showing a price momentums. Volumes are a little bit increasing. So whenever the counters is forming a very good strong formations on the downside after the good kind of a rally, then those are the counters are very where the risk reward ratio is really favorable in the investors point of view. So the Kamath Hotel is the one can go for a long positions. Upside 340 to 360 levels can be seen. Another interesting from the pharma is the Cipla. This is the particular counters. It's really doing very well from the last few weeks. The weekly chart shows that the counter has given the breakout of a downward sloping trend line which has been falling from the last 6 to 8 months. So after stock is given a very strong breakout of a downward channel of 6 to 8 months, which is a very positive indications on the technical front. So Cipla is the one counter one can go for a long positions. We are looking for a target of 1680 to 1700. So this is the one stock one can go for long. Another interesting setups on the stock specific is the Cummins India. This is also the one counters which has given a very strong performance from the last 3 to 6 weeks. We are continuously hitting the new higher levels in the formations of the higher tops, higher bottoms, and it has a very strong potential to touch the feet of all-time high, which comes nearby 4100. So these are the few counters. I'm very stock specific momentum I'm catching in this kind of a market because sectoral rotation is continuously going on, but not all the stocks are participating in that particular sectors. So those who are really giving a very strong formations on the weekly or the monthly charts on the technical front, I'm just suggesting those counters. So these are the three stocks which are in my radar as of now to initiate a long positions.
Okay. Swati, let's also take a view on the, gaming companies, because the online gaming bill has now been passed by the parliament, both by Lok Sabha yesterday and Rajya Sabha today. And therefore, these stocks have been consistently under pressure. Look at a Nazara Tech that continues to be softer, about 2% lower in trade. Delta Corp, on Mobile Global, these are some of the stocks that are clearly facing a reaction there. Now, for Nazara Tech, there is a viewpoint that its 800 crore rupee investment in Pokerbazi could actually face potential write-off if this bill moves forward, which is now clarity is being given there. Even though the company's management has actually come out in the media and said that they own about 46% in the company, but they are yet to look at what the contents of the bill are. So that's one. How would you look at these gaming space stocks? Is it best to stay away right now for those who have been holding the stocks in their portfolio? What would your advice be?
Actually, frankly speaking, I'm not much more bullish on this particular sector, and I don't even recommend this kind of a stocks. But if I look towards the technical setups on those Nazara as well as a Delta Corp or the on mobiles, Nazara we already have seen a very good kind of a rally. So on the today's news, we are witnessing a profit booking from the last two trading session itself. So those are having any long position, they should book their profits and not to create major long positions into either on the on mobile or the Delta Corp rather than concentrate on the quality counters. This will be my suggestion for the investors and the clients.
Okay, got that. Let's quickly just take your words now on the markets then forward from here. 1 minute to go before we shut up for the day. 25,077. We end this weekly options expiry on a positive note, 24 points higher amid all that choppiness and volatility. What's next as a strategy on the Nifty?
See, my view is definitely positive on the markets. Today, we have seen a very well placed Nifty about the 50 days moving on average. Intraday, we are witnessing some sort of a selling pressures, but I believe for a longer term horizon or the at least for a few weeks, we are likely to witness the upside target of 24,400 to 25,400 to 25,600 levels. Downside, it has a very crucial support at around 24,700. So, as long as it sustains that supports levels, my view will remain a positive. One should definitely concentrate more into the stock specific trading because the Nifty and the Bank Nifty will continue its choppy trading sessions in the near term futures. Expiries are going on, a lot of the global news are coming. So better concentrate on the stock specific trading. But the overall setup of the Nifty is definitely positive. As I said, I'm quoting a target of 25,400 to 600 levels from here onwards.
Fair point. Swati, thank you so much. Appreciate your time with us and all the strategies that you always share with our viewers. Appreciate your time. Thank you so much. All right, viewers, let's start wrapping up. 24 points higher is where we have ended Thursday's trade. 25,075 is the level at which the Nifty has ended the day's trade. With real estate, pharma, oil and gas, financial services, private banks, IT and infra stocks or sectors, moving higher in trade, especially led by the pharma stocks that moved up in the second half of the trading session. This is despite the volatility index declining by 3.25%. You do see FMCG down, broader markets down, autos also seen some profit booking, and metals and consumer durables also, on the back foot in Thursday's trade. So Cipla was the top performer. Dr. Reddy's, Bajaj Finserv, ICICI Bank and Hindalco were the stocks that moved up as far as the Nifty movers are concerned on the higher end. On the lower end, Tata Consumer Products, Bajaj Auto, Power Grid, Eternal, IndusInd Bank, these were the top laggards. FNO movers, PG Electroplast moved up, Titagarh Rail, Mankind Pharma, these were all the stocks that moved higher. On the downside, look at BSE. It declined the most in the FNO space, down by over 8%. Angel One was another one that was down by 7%. MCX, the third one, again from the capital markets exchange related stocks that felt the impact of the kind of discussion and statements that came in from SEBI talking about there is a thought process that there could be a longer week, duration of the tenures of derivatives contracts. If that happens, these exchange related stocks, brokerage related stocks, do they lose a lot of volume there? Will there be an opportunity to offset some of that impact? Is something will be as top of our discussion points with some of these companies going forward from here too. So thank you so much for being with us on the program, and do stay tuned on to Business Today television even beyond the market hours. Coverage continues from the world of business and finance.